All right, we welcome everyone. Today, we would be continuing our discussion on the SimplyPips podcast on other things about trading. And like we announced in our Telegram group, we hope to look at finding the best trading strategy as our topic of discussion today. And for almost every trader, retail trader I know, they went through a journey of trying to find the best strategy. Unfortunately, asking most of the profitable traders I know, the conclusion is there isn't one specific strategy that is the best. They would favor a strategy, but when you dig deeper, you discover that they're favoring the strategy because it suits their personality. They might be aware, in fact, many of them are aware of some other strategies that deliver higher returns than what they presently use, but they can't just find a sync between themselves and that strategy. And they've decided to opt for consistency in profitability against seeking for higher yields. So, there lies the problem. How do we find the best strategy for us? Having established that there is no strategy that is 100%, I don't care what every person in the interweb is saying. Most people, most mentors pride themselves in the fact that they've been trading for 35 years and 25 years. And what they intend to drive home with that is that they are experienced, right? But what most people get out from there is that, okay, you've been doing this for 25 years, 35 years, it means you have to be very good. When you dig into the life of these individuals, they are not among the top richest in the city they live, let alone the country, or let's say the world. So if you know how to consistently take 20, 30, 40% off the market on a monthly basis, you should be stupendously rich. You should be stupendously rich. And I don't care who that mentor is. I don't care how popular their trading systems are. If you can get 5% constantly every month, you should be stupendously rich. You only need to go to, I think I didn't plan to share my screen, but I would just to portray a point. If you go to compoundingdaily.org, if we go to compoundingdaily.org, let me share my screen briefly, just to portray this point. If we go to compoundingdaily.org, and we put an average of $1,000 for the ease of calculation, and let's say you are able to do 0.5% per day, 0.5% per day for 20 trading days, we put you at about 10%. We'll put you at about 10% for a month. So let's say you do this for 1 year, right? You do this for 1 year, and that will give us like 260 days when you take out the weekends. And for the purpose of this illustration, we'll assume you're not withdrawing at all, and you're taking in everything, include weekends, no. 0.5% on 1,000, and you're doing this for 1 year. If we calculate this, it will return, the principal would have grown to 3,650 if we are growing on a daily basis of 0.5, right? It will grow, it should have grown to over 3,000 plus, and you're growing your account. Just a minute, please. I need to be sure I'm doing the right thing. Let's come to, yep, that's it. That's it, right? So when you see some people online tell you that they do daily, maybe 2% daily, they do 2% daily, right? This is what I want you to have at the back of your mind, 3,006, right, for 1 year. 2% daily. This is what it should amount to, right? Notice the difference, 172,000. 172,000. Now, this is 1 year. Can we multiply this for 2 years? That would be 520, if I'm right. And let's do that and see. Notice that, right? That's $29 million, right? You could do this for 4 years, and that would be 1,040, right? And let's calculate that. Right, that's 1,000, 100,000, million, and that. That's what it looks like, right? So it just goes to show that even though I understand that with this illustration, we didn't make any withdrawal, but it just goes to show that people who say they've been trading for 35 years or 25 years, it could just mean that they've been trading for 25, 35 years, that's true, but they only became profitable a few years back. If you have been profitable for that long, you should be stupendously rich. Else something is not just adding up, right? So I had to deviate that way to make us understand that I don't care the name of the mentor. I don't care the name of the person. Mathematically, some things are not adding up. And the main thing I see there is that there is no fail-proof strategy. If I know that Euro USD will move for certain, I know Euro USD will move 5 pips up before moving 5 pips downwards, I'll sell my house, sell everything I own, and take 100 standard lots with 3 pips take profit to the upside. The reason why people can pinpoint where price will get to, but will not stake the whole of their accounts, is because there is a large gap and a large void called uncertainty. Right, so I woke up this morning to a post on one of the YouTube videos we have on our channel, and the guy started by saying, blah, blah, blah. Just tell us where price will go to before price gets there. And then tomorrow when we come and price gets there, they will believe you. And I remembered exactly that I was in that guy's shoes some 2 years back, right? Looking for one holy grail of a strategy. I even went as far as paying money to find out if there is any indicator that can predict the future. How gullible was I? Trying to find an indicator that will predict the future. I found one. That thing looks like a TDI. And it will print like 5 or 6 candles ahead what it expects the TDI to do. It failed woefully. Then I found another indicator. This one looks like a moving average. It will print ahead, trying to predict what the moving average will look like, and then you trade in line with that prediction. It failed woefully. And then I found Ichimoku. Ichimoku Cloud clearly predicts what the future will look like. And if you've used it for a while and you rely solely on it and you negate risk management, you negate trade management and all the likes, you blow your account in record time. So where is the perfect strategy? Some people get into wars trying to impose on others that my strategy is better because I use a naked chart. And some other persons get depressed simply because the guys trading naked charts always seem to be the guys bragging. I know some profitable traders, they have 6 indicators on their chart. When I look at the charts, I get confused. It's like I'm having a headache. But they can interpret everything on it and they are profitable. So who cares whether it is a naked chart or a clothed one? There is no 100% strategy anywhere. However, there could be the best strategy for you. There could be the best strategy for you. So what is it? How can you find the best strategy for yourself? The journey into finding the best strategy for yourself is a journey of self-discovery. You have to know what type of person you are. In fact, I would stop at that point and come back to this point and digress by saying who you are when you are not trading will most likely affect what you would find in yourself when you begin to trade. If you have never, ever set a goal for yourself and personally, without any external force, work towards achieving the goal, planning how to achieve it, and eventually achieved that goal, you will most likely fail in trading. Trading is a lonely journey for most people. The market exists without you. You only get into the market when you click a buy or sell, and your buy or sell on its own doesn't affect what the market will do. Right? So the market has no sympathy and the market is not fighting against you. The market is not against your stop loss, the brokers, and all of the other stories we tell ourselves when we're trading. If, for instance, if you're a religious person and you've been struggling to have what we call the quiet time, you've been struggling to meditate, and you're 30, you're 40, you've been finding it difficult to do that consistently for the last 20, 30 years, you would find it difficult to be consistent in trading. It's as simple as that. If you've not been able to be a winner outside of trading, you will struggle to be a winner in trading. If you've struggled to be consistent in certain aspects of your life that are important, you know they are important. If people come to you for counseling, you counsel them on what to do, but you yourself haven't been able to do it. You will find it difficult to be consistent in trading. I don't care what any other person says. You will find it difficult to be consistent. Because to be consistent in trading, you need to look inwards and then be self-motivating. You've got to have the ability to motivate yourself. You've got to have the ability to be focused on a goal, even when everything seems bleak. You've got to have the ability to wake up early, look at your charts, plan for the trade, and execute your plan flawlessly. If you are someone who is a very good follower, you never have a mind of your own. People can easily talk you out of your goal for the day. And then you end up that day achieving every other person's goal except yours. You find it difficult to be a trader, and a consistent one for that matter. Simply because if you've done your analysis and your analysis say buy GU, and then one person that you trust says sell GU, you automatically close out your buy and take a sell, and you most likely lose. It's even worse if you actually won after you close your trade, it will reinforce that belief that you are not good enough. And then you begin to seek success from others, from the signal of others. I remember when I started trading, I joined several groups. And I remember one particular name. That name, that guy was very vocal. And you find them everywhere in SimplyPips, in AQZ, any other. The most vocal people sometimes are the poorest of traders. They are the poorest of traders, right? The guy is always talking, and I'm like, God, this guy understands this thing. When will I be like this guy? Right? He keeps talking and keeps talking and keeps talking. Of course, he doesn't know me, and I don't know the person. Believe it or not, 2 years down the line, that person got into SimplyPips and had to attend our fostering program. That person got into SimplyPips and had to attend our fostering program. Meanwhile, while I was hunting for knowledge, if he says buy gold or buy whatever, I'll buy it blindly because I believed I was listening to somebody who was very, 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 good. But it turned out that he was also struggling. People don't tell you that they are struggling. People don't own up to you that they are struggling. They tell you about what price will do on the weekly, monthly, daily, but they don't tell you that they are struggling. Right? So if you are that kind of person that easily shifts your mind because someone else says so, on other aspects outside of trading, you most likely do the same thing in trading. So finding the best strategy is actually a journey into self-discovery. You've got to understand who you are. When we do some of our fostering classes, we throw out a question. Who do you think you are? Are you a scalper, a swinger, an intraday trader, or something in between that hasn't been discovered? Most people affiliate themselves with one of these three groups. But by 2 months into the program, and sometime 2 months after the program, they come up to own up to the fact that the choice they made 2 months back, 3 months back, some months back was actually wrong. They weren't actually scalpers. They thought they were scalpers, but they aren't. Scalpers are people who are comfortable with using humongous lot sizes, going for 3 pips, 5 pips, 10 pips take profit and taking a work. Scalpers are people who are comfortable with being wrong multiple times, right? But we have some people who trade like scalpers. They take the trade says get out 60 pips in profit. That is your exit. They take the trade, and once they find 5 pips profit, they are already thinking of breaking even or even exiting the trade. And there's some people who plan to hold the trade for 5 pips, like scalpers will do, but when they get into the euphoria of seeing a blue on their chart, they drag the profit to 120. And then the trade eventually becomes a losing trade. So most people think they are swingers. They love the name swing. They keep saying, I'm a swinger. And swingers are people who are comfortable to hold trades for more than 1 day, 2 days, sometimes even more than a week. They are comfortable to see price give them 120 pips and then pull back 80 pips, and they are now in 40 pips profit from 120. Then see price expand now to 250 and then pull back again to 200. They are comfortable holding their trades for days. Some people think they are swingers, and then when they get into trading live, they get sad, frustrated when price pulls back 80 pips. They end up closing the trade at 40 pips profit, taking a nap, coming back, and price has expanded to 200 pips. And they repeat this same cycle month in, month out for years, and they still believe they are swingers. right? You have to come to a point where you tell yourself that this is who I am. And if you don't know, you need to go into a journey of self-discovery. You cannot be like your mentor if you have different personalities. Your mentor may be a melancholic. You might be a choleric. The same strategy will most likely not work for both of you. The guy who is a melancholic might find it easy to follow rules. And the guy who is a choleric might find it difficult to follow rules if the rules do not make sense. And that statement, what I just said now, is the fundamental thing that makes mentorship not work. In SimplyPips, for instance, we know it is strenuous taking people through 3-4 strategies, but the knowledge we have compels us to do that. It would be stupid to insist that everybody trade exactly the same way. For instance, the last strategy we discussed with the guys that came in September entails that you need to be up at the close of Frankfurt, or rather at the open of Frankfurt into London to look out for your setup. If you are somebody who is actively employed, and around that time of the day, you are either in traffic or you've already resumed at work, as good as that strategy is, having 70, 80% win rate in some months, you will not be able to trade that strategy. So the strategy is good, but it's not the best for you. So it isn't so much as to how good the strategy is, it is more of how compatible you are with the strategy, right? And that takes us to the next part, which is deriving data for yourself. Most people look onto others to tell them who they are. Good traders seek out who they are themselves, even though they might use the help of others. One way you can seek out who you are by yourself, and that's after dealing with your self-esteem and some other things, your ego and some other things outside of trading. In trading, one way you can discover who you are is through a system called back testing. Unfortunately, most people play down on back test. Some even say it is useless. And that's because they do back testing the wrong way. When you back test, especially if you do back test the right way, use back testing tools, or you use the playback button of TradingView, for instance, if you have a paid version, and you do that with the mindset of time, how time elapses. You are not playing it so fast. You allow it to go tick by tick, and you see how price evolves. It sort of tells you, gives you a mental picture of how you relate with the strategy. I remember when I was learning how to trade BTMM, Beat the Market Maker. One of the things we use as our entry is what we call the shift, the cross of the 5 EMA over or below the 13 EMA. Several times I would see the 5 crossing over the 13 EMA. But the rule says you have to wait for the candle to close. But because I'm naive and I'm eager to trade, I will see price pushing upwards and the 5 EMA crossing the 15 EMA while the 15 minutes candle hasn't closed. And I'll initiate the trade. Once I initiate the trade, toward the last 2-3 minutes of that 15 minutes candle, the bullish candle that was full-bodied will become a bearish pin bar. Sellers will just come in and the price will go down, and the cross I saw initially will disappear. The EMAs will just separate back. But now I'm in the trade, and I didn't have the mental discipline to exit the trade I will automatically move into the most popular trading strategy upon the face of the earth, which is the hope and pray strategy. I'll begin to hope and pray that eventually price will go my way. And oftentimes I lose that trade. Price may end up buying later on, but I would have been taken out of the trade. And now when I see a crossover, I'm not confident again to pull the trigger, and I just lost some money. Right? So you need to see how your person, with that, when I saw that, I tried overcoming that several times. I couldn't. I had to take crossing of moving average outside of my trade plan. So I kept trading BTMM, but I had to look for something else aside the crossing of moving average out of my trade plan. And I substituted it with something else. Now, when I went through the process of backtest using the backtest tool, I discovered that the person teaching me BTMM had been saying something. He's been saying it over and over and over, but it didn't sink into my head. He kept saying that the shift, there's a difference between a shift and a shift candle. A shift is when the EMA cross. The shift candle is the candle after the EMAs have crossed. He kept saying it, but it didn't make sense to me until I actually went through the process of backtest. When I went through the process of backtest, I saw live, if you use the backtest that give you fake tickers, right, or something like TradingView playback, you would see the EMAs crossing and uncrossing, crossing and uncrossing several times. And eventually, when it crosses, and you allow the shift candle, which is the candle after the cross, to happen, then and only then can you say with some form of certainty that the EMAs have crossed. You see, but when you do the normal back test people do, when you do the normal back test people do, what you see is you just come to the chart and say, okay, the EMA crossed here, I'll take a buy. The EMA crossed here, I'll take a sell. When you do the real back test, you get to see in real life how it plays out, how you would have reacted in the heat of the market. And a back test that doesn't allow you to mimic what you would have done when you are trading is not a complete back test, right? So most of the time what people do when they are back testing is that they just go check, okay, the EMA crossed, if I enter the trade, I would have won 2 times. True. That is the general back test. The back test for self-discovery I'm explaining is different from that. You need to look for a tool that allows you to take a trade with your lot size and not being able to see the right-hand side of your chart. Take a trade and hit stop loss or take profit. You know at the back of your mind that this is demo trading, but adrenaline will be pumping in you because you don't know if you took the right decision. I don't know if I'm making myself clear enough. That is the proper back test. The back test here is not for the purpose of looking for data about the strategy. This back test I'm talking about is looking for data about your personality. The strategy could work on paper. It might have an edge on paper, but can it sync with your personality? Can it sync with your personality? Would you be able to apply it? That is a different kettle of fish, and that is one singular thing that most traders don't do. They go to YouTube, they see a strategy, it looks well, they go and try to, practice that strategy, and all of a sudden, it doesn't seem to work for them. Not because the strategy in itself is bad, but they've not come in sync with the strategy. They don't understand how it plays out in real life. They've not tested it over time. right? So an alternative to that, to this form of back test, is what we call forward test. But by my own, in my own experience, yes, forward test is good, but forward test for me is slower, right? So let's say you have you use this weekend and you learned a very good strategy. For you to be able to generate enough data to know whether that strategy suits you or not, you might need to forward test for 2 months. That is futuristic. And for most people, they won't do it for 2 months. If they have 2 or 3 back-to-back losses, they're leaving that strategy and they're looking for another one. So you never become profitable. You keep hopping from one strategy to the other, right? A solution to that, even though you still have to do forward test, is back test. And back test like you are forward testing. Get a tool that you can back date to like the 1st of December 2020, and then it prints the candle for you like you are actually sitting in, like it's actually happening live. You see price trading into the order block, you see the breaker, you see the source, you see the PE, you see everything you want to use, and you take your trade as if it is happening live. What that does is that you are able to do 3 months back test in 1 week. You are able to interface with the market. What you would have spent 3 months doing in the future, you've been able to do it in 1 week. You are able to make an intelligent decision as to whether this suits your personality. You are able to see your flaws in executing the trade plan you've written down, and you are able to find that, look, I don't think I can bear having 50 pips profit and see it come back to 10. I don't think I can bear it. Why that will happen is that because you are doing the back test like a forward test, the emotions will come. You feel the emotions real time, like it is happening in your live account. Until your emotions get into play, you cannot discover who you are, which is the reason why I don't believe that we should trade demo accounts until we are profitable before going live. I believe that once you've traded demo accounts for a while, you should stake your $100. Stake your $100 into a cent account and call up your emotions. Let your emotions begin to play on you now. That is the best way to know yourself. So in summary, getting to know the best strategy for you is a self-discovery. Nobody can do it for you. FTMO posted a video about 2 weeks ago about a trader who happened to be a previous, what sport was that? He was playing tennis. He was a previous tennis player. And he made mention that he used to be obese, right? And that even after overcoming obesity, he had to go for plastic surgery to remove, the flaps, the excess, skin. Now, he made mention, he tried to liken discipline in trading with weight loss. Anyone here who has had somebody go through the process of weight loss will understand that weight loss is a personal journey and it's a difficult thing to do. You need to cut off from something that is inbuilt in you, the insatiable desire for food and high-calorie foods, right? Which are usually addictive. Sugar, for instance, is more addictive than most drugs, right? So you need to break away from that, and that is a difficult thing to do. I can imagine some of you here telling yourself, I'm not going to take soda, I'm not going to take this soft drink, and 1 day later you've gulped in like 2 bottles, right? It's difficult to do. Unfortunately, that is how difficult trading is if you need to overcome certain parts of yourself. Unfortunately, is the gospel truth. That is how difficult it is. So the guy tried placing weight loss and the discipline required to be a profitable trader side by side, and actually liking the two. Nobody can lose weight for you. They may encourage you, they may point you into what you need to do, but they can't lose the weight for you. You have to lose the weight yourself. So stop looking out to mentors. Some people say, oh, Bishop, can you trade live? Let's see how you trade. Let me see if I can copy you. You don't have that. If you don't have that mentality, you can't do it. I'm going to take a trade with five pips stop loss, and I'm getting out in 5 pips take profit. You might not be willing to do that. Why? Because when you get out at 5 pips take profit, price still moves 15 pips. And now your mind tells you that, why did you get out at 5? You could have held on for 10 more pips. Now, so you are beginning to think like an intraday trader and not a scalper. A scalper doesn't care what price does after he gets out of the market. He takes his money and he takes a walk. Right? So all of that won't really help. Yeah, it could help to some level, but it won't change who you are. To be a good trader, to find the best trader for yourself is a personal discovery. You need to generate data for yourself, data about yourself with regards to the market. And nobody can do that for you. You do that yourself. You take responsibility for generating your data about yourself. Last thing I will say before I give room for discussion here is that most strategies, or let me not say most, there are several strategies that are profitable. What makes them not profitable is the trader. I have friends who are profitable trading trend lines and round numbers. Just round numbers, right? What we call quarter points and trend lines. And they are profitable. I have friends who are profitable using Ichimoku. Some use Hikinashi. Some use order blocks. Some use AQZ. Some use institutional order flow. Some are die-hard fans of ICT, and some see nothing good in ICT and they go for Wyckoff. Some don't understand Wyckoff and they prefer BTMM. Some are completely confused with counting levels and they just use stochastics and TDI. Right? And they are profitable. When I mean profitable, I mean they are profitable trading for prop firms. In fact, recently, if you doubt this, go to FTMO and subscribe to the channel, go as far back as history will allow you, listen to all the interviews of profitable traders in FTMO. I haven't seen one using BTMM, and I haven't seen one using ICT. And those strategies are the most popular strategies in the retail world. The question is why? Are the strategies bad? No. The traders are not just good enough for the strategy. Right? So I'm going to stop at this point. I haven't said that no holy grail of a strategy. It is more or less the individual. Some find it difficult to know the difference between a setup, an entry, trade management, trade plan, or execution. Some see every setup as a reason to take a trade. Some understand that, yes, there is a setup, but then I have to wait for entry. And then after entry, you are no longer a trader. Once you click buy or sell, you are no longer a trader. You are now a manager. Your job is now to manage the trade. And there are two ways to manage a trade broadly. It's either you manage it live or you've managed it already in your trade plan by setting fixed take profit and stop loss. Right? So most people are good at the aspect of trading, when to get in, how to get in, then they are very poor in trade management. Right? I have a friend in the fostering program, and he was sharing what happened to him lately. We have a challenge we normally have for them, and he usually have an issue of crossover when market is shifting from New York into Asia. There is that crossover period where the spreads are widened. So one day price was very close to his stop loss, He knew if price widens at crossover, he's going to take out his stop loss, and he's pretty sure his strategy might just, end up playing out. So he removed the stop loss and was waiting for crossover to happen. The night sleep crossed him over to the other side. By the time he woke up from his short slumber, it was like some hours into the night, and price had gone very, very deep into his equity. So he imbibed the hope and pray strategy, hoping that price will make a pullback. And for every small push in his direction, something will tell him price is eventually coming back. So he will take a new trade, hoping to dollar cost average, and it ate so deeply into his equity, right? That is knowing that what happened to him is he got his entry very right, but he was very poor in trade management, and then he lost more than he planned for because his trade management was poor, not the strategy. It's the trader. It is still the trader. All right, so I'll pause here. Prof, are you online?
Yeah.
All right, over to you. I'll allow you wrap up with questions and any other comments. Thank you.
Yeah. So Bishop has virtually said all that needs to be all that needs to be said. I just saw something, and that's why I'm actually laughing. So you see, when it comes to the issue of trading is so individual, so personalized that it is very difficult. That's why if I see two individuals, like if you're in the fostering program and you submit your trade plan, and I see exactly the same thing there, I'll just start watching the two of you. I won't tell them, I'm just saying this for the first time, but that's just what I do. I start watching those two people, because it is very, very difficult to see two individuals, no matter how much they learned under the same person, even if you put them in the same group to backtest together and everything, you will still see a bit of individual differences in their phrasing, in the way they look at certain things, in where they look to get out, and all those things. In fact, when Bishop was talking about indicators, I just quickly opened my empty for my phone to look at how many indicators I actually have on my chart. And I saw that I had 7. And that 7 does not include 2 that cannot be placed on my mobile phone. They are on TradingView, and one is only on PC, which is this thing we use for our C5. So I use close to about 9 indicators, 9. And for me, you will never see me trade naked charts. It doesn't happen. It doesn't happen. Why? I discovered early that I get pretty confused when it comes to doing all the whole trend lines. That's where I started from, support and resistance. Question was, there is support up. Sorry, there's resistance 1 up. There's resistance 2 up. There's resistance 3 up. In fact, if you want to start counting, you count to resistance 10, 100. How do I know which resistance I should be working with? Then we move to channels and trend line. Give 5 traders the same charts, and I can guarantee you, or let me say 10, I can guarantee you that not more than 2 or maybe 3 will draw their trend lines exactly the same. So this issue of subjectivity, I just fed poorly. Like, if you allow me to just be randomly drinking, and that is, like Bishop mentioned, that is the way I am. Like, I hate things just happening. I jokingly tell people, I said I have plan A, plan B, plan C. The reason being that when I'm executing plan A and it starts failing, I move to plan B. And when I'm in plan B, I'm already developing plan D. So that when plan B fails, I can move to plan C and know that I have plan D while I'm still developing plan E. So I generally don't do well when things just happen and I have to respond. And usually if things happen around me and you ask me a question, I'll either smile, I'll just say, or but you'll not see me commit. I won't say anything definite. So once I understood this about who I am, who I was, then there was no point trying to reframe things, not trying to use strategies or things that will be subjective. So I have rules. If I'm looking for trends, there are specific things I look for. So for me right now, I use, for those in the first class, they know, I use my Hikinashi. Simple. Very, very simple things that I use. My Hikinashi, my moving averages. Simple stuff. My Tiden, simple. I look at them, there are simple lines on my chart. I look at them like this, bah. And I know whether I should be buying or I should be selling. Full stop, no complication. I'm not thinking about there is one something up there, or there is one, that is my own IOF. My own IOF is that I look at it, my moving averages are start up. Good, I'm buying. Full stop. There's nothing to think about. I'm not budging about where there is a breaker, or where there is a source, or where there's anything. That is me. Yet I'm in SimplyPips, where we teach institutional order flow. If you ask me to explain it, I will explain it to you exceptionally well. But will I treat it? No. Why? I found out that it just doesn't work for me. Discounts. If you go to ICT, you will have, there are at least 4 different ways to identify discount levels. I just discovered that a lot of them, again, are subjective. Give it to 10 different traders, they might all give you different answers. So I have to find something that anytime I look at it like this, I know exactly what I'm doing. So all the strategies I teach, all of them, all the strategies I've ever taught, if you have ever been in SimplyPips from the very beginning, any strategy I've ever taught, you will immediately know how to identify your trend. Give it to 10 traders. If they really study that thing well, you will all know whether we are buying or we are selling. Full stop. Nobody will be wondering, there's this one here, there's this one here. So you need to identify, like, this is me, and frame things around what works for you. And that thing I realized about myself, Bishop scalps. He can take 2-3 losses consecutively and he's not bothered. The moment I start running into 3 consecutive losses, as much as we say we lose gallantly, our loss level is, our loss tolerance level differs. So if you know that you are not someone that you like a whole lot of losses, I carry risk management on my head, like you guys know already. So I'm always very, very conscious of the fact, young man, your number one job is don't lose money. So I try to frame strategies around things that allow me to take something out of the market, and the market will do whatever it wants. So I might not be making as much money, quote and unquote, but I maintain a level of what? Consistency. So the number of drawdowns, consecutive losses, and all that I have will tend to be low. Again, I just go out, I'm someone that I want to, for me to rest well, like when I'm in a trade, for me to really relax and allow that trade do what it should do, I don't scalp. I don't know how people do it. I absolutely don't understand. Even when I started trading binary, and Bishop was explaining everything, was explaining on 1 minute and taking trades for 5 minutes. I tried it for a while. My brain wanted to blow, like it was as if my head was going to literally blow. So I told myself, I said, young man, we can't do this. Let's not deceive ourselves. We can't do this. So I reinvented things to allow myself. So while everybody is trading for 1 minute, holding trades for 15 seconds, for 1 minute, for maximum of 5 minutes, me, I hold my own trades for 30 minutes. I don't know how to do this. Sharp. I don't do it. So you have to understand who you are and then reframe things around that. I'm just giving all this illustration of myself, hopefully to help someone out there to, get some things. Taking something off the table. 1 hour, I have taken something off the table. The worst the market can do is that it comes to hit my stop loss and we are breaking even. At that point, I can sleep. Let the trade go into 120 pips, comes back to 80 pips or whatever. That is your own business. I will allow the trade to play out well. Why? What is the worst that can happen? The worst that can happen is that what? I'm a break even. We will play draw. So as we say in Nigeria, pata na draw. So at that point, I am not disturbed again. So you need to work out all these things. Meanwhile, there are people that they don't have that issue. They take their trades, they're waiting for it. They have that mind of steel. People used to say, Prof, you have mind of steel to be able to hold trades for that long. That's not true. The reason why I can hold trades for that long is that I know anything it is now doing, the worst that can happen is that I and the market will play draw. So once my 1 hour has been hit, that's all. Take it out. Let the market do everything it wants to do. Next thing, I struggle with all these subjective stuff, take profits that, okay, if the market does something like this, I'll take profit. I will see it. But then I will start convincing myself that there is some other thing that I'm seeing that is negating what I said I should see in order to take profit. So simple solution, forget about seeing or not seeing. When you take a trade, based on your data, what do you want to go for? 5R, 1 ATR? Simple, we place our TP there. If it gets there, fine. It doesn't get there, fine. That way, once I take a trade, for me, my own destiny is 1, looking for my setup. 2, looking for entry. 3, position sizing. Once I take a trade, full stop. That is the end. Bishop was talking about trade management. My trade management has finished. It has finished as I'm taking the trade. Why? There is nothing to manage again. Because I discovered I performed poorly trying to do continuous management. So once I take the trade, that is the end. For some of us, that might just be what we need to do. So you take a trade, put your TP immediately. As you're taking the trade, you put your SL, you put your TP, and you forget it. Spread widens during midnight, takes you out. To God be the glory. It doesn't widen to take you out. To God be the glory. The best you can do is go and look for a broker that they don't manipulate spreads anyhow during crossovers. So these are all so many things we need to pay attention to. I was expecting that we'll be dropping questions in the chat box. And I think the only one that someone said is that, sir, please help us with one backtest tool that we can use to backtest. Anyway, I'll leave Bishop to attend to that in the group later. I know for everyone who has passed through the fostering class, we have done that. So if this person is someone that hasn't been through the fostering program. So allow Bishop to decide on that. I think there are no other questions, so we can wrap this session up since there are no questions in the.
Yeah, I would take a screen grab of everyone in this discussion, and they will have the free tool for backtest.
Wow. You see, that's why it pays. That's why it pays not just to wait for recordings. I'm telling you, I was just coming back from a wedding. We just got back home around almost 5 p.m. So it pays. So those are the rewards for being live, for being online. So for everyone who is here, you're going to get the tool.
Just give me 3 days. I'm going to do a short video on how to use it. Then I will also release it to you guys. That will mean you have to chat me privately from Wednesday. I mentioned the name you used in joining this webinar because that's what I can remember. So somebody already here that is joining us now might have a challenge getting that tool because you joined with your name. I can see here is HP, and I don't know if HP stands for HP computer. So how do I differentiate who you are?
Yeah.
But I think every other person has their name. I'll do a short video on how to do it. I'm interested in you trying to discover who you are, really. Once you've discovered who you are, and you go to our YouTube channel, you practically almost find a strategy that you can tweak a little to help yourself. Once you've discovered who you are, you can trade BTMM and be profitable. You can trade ICT and be profitable. You just need to discover who you are.
When I tell people that almost most of the strategies I teach are my own modified versions of basically the Judas swing. Basically, it is ICT Judas swing to a large extent. All the strategies I trade, to a large extent, it is. Because
how about HPLR? HPLR that we keep shouting up and down is an ICT concept. It's there on his YouTube channel, right? It's there on his YouTube channel. I just looked at it and discovered I couldn't fit in with what he was saying. ICT himself agrees that he could be boring. ICT will want to give you a 5 minutes content and he will ramble for like 1 hour. He understands this. He doesn't see it as an insult. He said that's his personality. But when he gave the strategy, I discovered that I couldn't use it exactly the way he was saying it, right? So I tweaked it to suit my personality, went down as far as 5 minutes, then went back to do a 2 years back test. And for some pairs, I will not mention the pair here, but some of you in the present fostering class, you're already seeing it. For some pairs, that strategy was giving like 75% win rate. Incredible. And those are pairs that people don't talk about. People don't talk about them the way they talk about EU and GU. They are more or less mundane pairs, right? They were giving that much. And that's how we brought out the high probability low risk. So who says you cannot pick high probability low risk and turn your own to high probability low risk? Tweaking something to suit your personality. Who says you can't do that?
In fact, one of the things you guys should realize is most of those in the fostering class in the heroes of the fostering class that have actually found consistency, actually, rarely do you see them trading a strategy exactly the same way we taught it. Rarely. Most of them will just find 1 or 2 things they will like the strategy, and they'll just go, okay, I might just need to just stick up something here. For instance, one of those in the fostering program, even though he trades daily OBs, his own modification is time. There is a time when he's looking for his own entries. That is not just what we thought. So once he doesn't get his entries at those points, that is the end for the day. He closes shop and goes to do something else. So you have to find everything, find what works for you, and then modify it to suit you as good as it can. And you can only do this when you have taken out time, like Bishop was mentioning, to do a personality back test. So we have 2 types of back tests now. We have a risk management or data back test or strategy back test, and then we have personality back test. The first one, you are trying to determine how the characteristics of a strategy. The second one, you are trying to determine the characteristics of you as an individual. How do you react to situations? How do you react to the market? And then other thing I will mention in regard to this is, even when we talk about forward testing, many of us we say we are forward testing is a lie. What do I mean? If you are not keeping accurate records of what you are doing, including your reactions, one of the things I do at the end of every day, at the end of every week, is I look at trades that I took, how I reacted during the trades, whether I kept to my rules or not, how I felt at certain points. I'll write them down. The reason is I can go back through. So I have books. The largest number of books that I've kept anytime is my trading journals. I will just go through it. Okay, these are the things, these are this, these are this, these are this. So when you are reading through those things, and you're just seeing how at some point you were feeling so distressed, it was as if literally your head wanted to blow. Write all those things down. By the time you are reading through it, you just begin to discover that, wait, see, this thing just doesn't work for me. So even when someone is suggesting next time, see, I know it is good, but this one, it won't just work. It's just not me. So if you are even forward testing, the only way to forward test appropriately Again, you are going to do it two ways. If you want to, two types again. There's strategy and there's personality. So strategy means you're writing down, you're looking for all those things we discussed in risk management class and costing program, all those risk of win. You're looking for expectancy, loss ratio, win ratio, and all the other things that we are looking out for. But you must now do the personality one of, this is how I was feeling, this is how I reacted to certain issues. This is how I was feeling before I took, this is how I was feeling when I woke up. So these days I've just learned myself, if I don't sleep well during the night, and my definition of sleeping well is that I need to get at least solid 5 hours of rest, solid one. If I don't get that, once it's just getting to like 12:01, I just call it a wrap for the day and I go home. I'm out anyway, I work from home, but I just forget about training for the rest of the day. Why? That is the peak. From that time on, my performance drops drastically. So one thing is, I don't even joke, I try not to joke with my sleep. So these are the things that you need to find out about yourself that can make a whole lot of difference to your trading, a whole lot of difference. So this Zoom has gone on for too long. It's supposed to be for 1 hour or less. So let's call it a wrap, except anyone has any other questions, which I'm not seeing.
Yeah, Prof. We'll call it a wrap. We might continue this same topic next Saturday, because I have some things in my notes here that I couldn't quite mention. But we'll continue next Saturday, and hopefully we'll be able to build a team together. I want to say this in recording. We are working at SimplyPips on building something that looks like an online academy. And our intention is to go around campuses in Nigeria, reach out to younger people and help them understand how to make money profitably. We would be looking at binary options, we'll be looking at Forex trading, we'll be looking at crypto, and we'll be looking at stocks. So if you know you want to be part of us, and you can able to create links for us in this area or any other forum, it doesn't have to be young people, it could be retiree or anybody, get in touch and we'll add you up into a group and we'll begin to create the wave we need to create in the industry. Have a wonderful evening and thanks for coming online. Bye-bye.